The phrase family office has really been coming out over the last couple of years. It's really based upon not only dealing with the family's investment side, right, which is what I call the hard side of the business and allocations, but it's also dealing with the soft side. That can be anywhere from, making sure the jet's where it needs to be, making bill pay, paying the bills, looking after all the properties that they own personally. But it also has to do with succession plans and governance and making sure that there's cohesiveness within the family. And that's what we call the soft side of it.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Our guest today is DJ Van Keuren. He's a member of the Forbes Real Estate Council, author of Real Estate Investing for Family Offices, founder of the Family Office Real Estate Institute, the Family Office Real Estate Magazine, and is a frequent speaker at family office conferences around the world. Most recently, DJ was a Family Wealth Alliance finalist for its Best in Industry Awards for Thought Leadership and Special Industry Contributions Award. He is also a past editorial board member for Real Asset Advisor Magazine, is the past president of the Harvard Real Estate Alumni Organization, and a prior board member of the Real Estate Academic Initiative at Harvard. DJ and I have a great conversation just about some basic things around family offices. What is that? Who should consider a family office? And he is an absolute expert in this space. It is incredible. And you're going to hear him share just that. I learned a lot from him. I know you are as well. I hope that you have subscribed to the show and are sharing it with your friends as well. I hope your business or your personal investing portfolio is benefiting from listening to the show. We'd love to hear from you. I would appreciate a written rating and review as well on iTunes. And you're always welcome to email us, info@lifebridgecapital.com. We'd love to hear from you. If you have a specific guest you'd love for us to interview, or a topic you'd like for me or a guest to cover, we would love to hear from you. As I have traveled, as I have met so many people in this business and space who are growing their net worth, all of a sudden they need to learn about this thing we call family offices. And it can seem daunting, can seem overwhelming. I have some friends who all of a sudden they sold a business or they inherited a large amount of money and they don't know what that means to have their own family office or to manage that capital well. Our guest today is an expert in that. And his name is DJ Van Keuren. DJ, welcome to the show.
Hi, thanks for having me.
Yeah, honored to have you. DJ, I want to dive right in because this is an important topic to our listeners. We have many passive investors. Our passive investors listen to the show, and many of them want to know more about this topic, the family office. Maybe give us a broad overview of family office and maybe your path to becoming an expert in this space as well.
Yeah, so currently the last number that I saw from the number of family offices in the world actually is about 15,000. And that's about 7,300, 43% here in the US. That number's gone up probably about 10, 15% or so. And that definition is based around having a minimum net worth of 250 million or more. And, how I fell into this was, I was an advisor in the 90s. I was in real estate from 2003 until currently. And about 7 years ago, I fell into the family office space. And that's where about 95% of the people that work for a family and how they fall into it it's just by that. They fall into it. And so I worked for a billionaire here in Colorado. And we were not only buying real estate, but also putting 100 million into oil and gas. We had 3 people actively trading equities. We had a foundation. We had 7 solar parks, and realized, look, I just need to continue to focus on real estate. So I got headhunted by the Heyman family, Giorgio Perfume, Georgie Beverly Hills, and came up with the first boutique office brand strategy, which is doing very well. And then there wasn't much more to do. So worked with a younger gen that owns one of the Major League Baseball teams, and then formed Evergreen, where we were a consortium of families. And over that time, I've been asked to speak at conferences literally around the world. So I've met a lot of people, and I've been able to really understand the space.
Nice. DJ, as you are helping so many people learn about family offices, I would love to talk very basic, but then, be able to dive in a little deeper for those who are a little more experienced as far as developing their own family office. But initially, You mentioned the definition of 250 million or more. Is that the standard? Is that when somebody should think about having their own family office, when they have the 250 million in net worth? Or, is it when they have 10 million? Or how do you look at that or consider, someone having their own family office?
So the phrase family office has really been coming out over the last couple of years. It's really based upon not only dealing with the family's investment side, right, which is what I call the hard side of the business and allocations, but it's also dealing with the soft side. That can be anywhere from, making sure the jet's where it needs to be, making bill pay, paying the bills, looking after all the properties that they own personally. But it also has to do with succession plans and governance and making sure that there's cohesiveness within the family. And that's what we call the soft side of it. So for someone to hire an internal CIO or a chief investment officer, it's usually at about 750 million to $1 billion when they do that. When you get down to 250, then or under, you start looking at more of a multifamily office to work with or an outsourced CIO. There's people before that have said, well, if you got $10 million, you can still have your own family. Well, family office, you can, but you're not going to be dealing with what the true definition of a family office is, which is, if you ever watch Succession, I mean, that's a legit issue. There's just so many nuances that money causes issues with. And the more money you have, the more issues and the more planning that's needed. And so always planning is important, regardless of how much money you have, whether you have $1 million and you want to pass it on or you have $100 billion. It's just the complexity of the planning and the oversight that's needed.
Now, I think that's so helpful to think through that, as there's numerous listeners I know that have considered thinking about their own family office and friends that I have. But, you mentioned, if you have less than the 750 million, considering like a fractional family office type arrangement, what does that look like? And how does that work, and just to ensure that, hey, maybe that's a good path for me?
Yeah. So there's two things that you really need to understand is that there are people that'll say, well, we're a multifamily office, right? And they'll have multiple clients, but they only focus on the investment side. They don't focus on all these other issues. And when that is the case, they're really just a RIA, registered investment advisor. They're not looking at the holistic component, which always needs to start with governance. And governance is the number one thing that families need to put in place, because that dictates how you're going to be making decisions and within the family. It could also include having a quarterly meeting where the family gets together to talk about various things, et cetera. But a real multifamily office, and there's probably about 6 or 7 of them, large ones that are out there, like BMO Family Office, Bank of Montreal Family Office, or Whittier Trust, which is out of California. And they have about 10 to 12 families that they focus on. And that's really all the time that they have to truly service and oversight. And also in the real multifamily office, they also have a back office that they could be doing the bill pay. They could be doing other components of it, or they might have 6 analysts looking at deals all the time. And so everything is thoroughly scrubbed going in. And so I think it's a matter of saying, how holistic are they really looking at everything? A lot of times planners will say, okay, well, you've got your investments and insurance. Well, there's a lot more to that, and the complexity varies too, based upon how much money you have.
I love that thought about just a holistic approach. It's not just about managing my investments. And so I've not heard too many talk about that as far as the family office. And you talk about even bill pay, to getting the whole family together, to discussing the path for the entire family, because it's going to affect all of them in a big way. While we're on that, though, what are some other things holistically that maybe a family office, does for this family that maybe is not often talked about, or somebody starting their own family office, they wouldn't even know to expect? You mentioned earlier, even having the jet where it needs to be, or, what are some other things that we wouldn't typically think about the family office doing for us?
Well, I'll tell you, the first thing that needs to be done, and by the way, depending on the size of the family, I mean, I even know multifamily offices and regular single family offices that even have a psychiatrist on staff. I mean, just because we all have issues with family at some point in time.
Yeah.
I mean, there's times with your brother or sister or father, mother, whatever the case is, everybody has some type of dynamics. Well, you add hundreds of millions of dollars to that, it just changes even more that dynamic, right? And, I think there's a big stat that I'll let you know about how much money's lost actually by families by certain generations. But the first thing that anybody needs to do is what's called governance. And that is basically coming up with how things are going to operate and how things are going to be structured within the family itself. That's the first thing. And what else is amazing that doesn't happen is you have these business owners, they've spent their whole life creating their wealth, whether it's in chemicals or tires or whatever. They sell the business, and they used to have quarterly meetings. They'd hire the best people to, run the company. They would have goals, objectives. I would say 80% of the time that the families and the family offices, they don't have a box to invest into. How much are we going to allocate here? How much are we going to allocate here? What's the returns that we're looking for here? What type of investments, et cetera? And that just blows my mind because that is, let's come up with what our objectives are. I mean, with your business, I'm sure you're saying, okay, this is what we're buying it at. This is the things that we need to do. This is the time frame we need to finish it by, right? And this is what we're looking for the outcome. And if it doesn't come out that way, then it's like, what could we do different? And so the other thing I would say is getting family members involved. I can't tell you how many times, even if you have sub $1 million, the spouse or the husband doesn't understand what's happening, where the money is, what's happening with the money, what's going on. I've tried to talk to my parents before about, well, there could be a day when you have to leave where you're at and maybe go to another location. I don't want to talk about it. Well, that's family planning, if you think about it, right? And it's affecting the younger gens. So it's the same way that you look at real estate, where whether you're doing a $10 million apartment or $100 million apartment, the fundamentals are the same. It's just that you've got another zero or two added to it and just more complexity, right? And that's the same thing from a planning perspective.
Yeah, no, that's awesome. So the governance, I love that. Yeah, it's like, how's it going to be structured within the family and getting all the family involved? I could not agree with you more. I have a family member who's a parent, owns a lot of land, and they're elderly. And I just said, well, do you all know what's the plan, for the land when they pass? And they're like, oh no, we haven't talked about it. And I said, well, you need to talk about it. Now's the time while they're still here, and so, but I know that they expect maybe tension around that. Right. And so they just avoid it.
That's the thing, is that it's like, let's not avoid it. And the very wealthy families, 50% of the kids don't want to even be involved. Right. Mm-hmm. I was at a conference, this is a number of years back, and this girl walks in and she's got like an exercise outfit on. And I'm like, so what do you do? And she goes, well, I teach Pilates. And I said, well, why are you here? She said, well, I think it's about time for me to sort of understand what's going on because I'm going to be getting all of this money, that comes in. And I'm thinking to myself, okay, well, we'll see how that goes. And when you look at even the definition, like we said, is 250 or more, 70% of families lose their wealth by the second generation and 90% lose it by the third generation.
Wow.
That means that only 5% get through the fourth gen. And that's a big problem, right? And it's not just, setting up a trust or, there's a lot more to that. And being good stewards of wealth, or foundations. And how are you going to, Warren Buffett is giving everything away, but his kids, put money into foundations they can run, right? So that's how he's sort of saying, all right, I'm going to give you a bunch of money, but it's for this purpose, right? And I think that's the extreme. But if you look at that, possibly even be part of the plan for the family, right?
Love that. I just thinking, I want to think through that. It's like 70% lose wealth by the second generation, 90% by the third, only 5% make it to the fourth generation. Tell me what's different about the 5%, even at let's say we've not made the 250 million yet. What are some things that any of us could be doing so our wealth, that does make it to the fifth or to the fourth generation, like that 5%?
Everything that we've been talking about, putting in a game plan in place, involving the younger gens about what needs to be done. I mean, there's a difference between creating wealth and getting wealth. That's why everybody that wins the lottery, they end up losing their money because they didn't know how to create it. So they just start spending it and it goes out. Same thing for the younger gens. They didn't know how to create the wealth. And so that's part of what needs to be done, not only the planning, but getting the next gens involved. This is what we want to accomplish. One of the best things that I ever saw, there's a gentleman, and he's passed, but he was fantastic. He sold his chemical company for about 400 million, I think it was, and older gentleman, and he had taken over the business from his father. And he gave his granddaughter $1,000. She was like 10, 11 years old, and said, okay, you need to give this away. So I want you to figure out where you're going to give it to and why you're going to give it to him. So she had to literally, and she got engaged. She was like, okay, well, I've only got $1,000. Where am I going to give it? Am I going to give it to this cause or that cause or for this? And so he was starting to have them engage to sort of learn about making decisions and the impact and the importance and everything else. And you can do that on the investment side too, to make sure that being part of some of the decisions that are being made. I mean, too often the patriarch, the matriarch built this wealth themselves, and that's all they've been doing. So they have what they're used to doing, which is controlling everything. Then it's like, well, you're not involving the other family members, and these are all things, regardless of your net worth, I think, that are really important.
Yeah, I love that, involving the kids. You and I were talking about masterminds a little bit before we started recording, and one of the guys specifically in the mastermind, they have an account, and I've talked to my wife. We're going to start doing this as well. It's like you have an account that's just for giving and involving the kids in, allowing them to say, hey, I want you to give this much away over this amount of time. I want you to be looking for those ways to give, right? And just helping them to start thinking that way, and just being generous, instead of just take. Right.
Yeah. And you can do the same thing, like I said, on the investment side. I mean, you can say, here's some, you got $1,000. What do you want to invest into? And nowadays you can do a lot of research online and ask, why is this? And what are you looking for? And stuff like that. So I think all of that is, very important. The other thing too is, we do the largest family office real estate investing study in the world at the Family Office Real Estate Institute. And 24.5% is the average allocation in a portfolio of family's investment. And I am the biggest believer, I am an advocate that the solution to solving that loss of capital, like we were saying, is real estate. I mean, there's not a better investment because of the tax benefits, right? I'm sure you talk about a lot, the appreciation, the cash flow, right? And it's a hard asset. You can't just go out and sell it tomorrow, right? So that helps you because it takes emotion out, because it's like, well, I don't have a choice. Well, guess what? That could very well have saved your hide, because the market came back. Unlike stocks, people are like, oh my gosh, I lost this money. And okay, if you sold, you did lose the money. And then with real estate, as you know, if it's cash flowing, it doesn't matter if the value is zero, because the property is not going anywhere. And historically, stocks have outperformed. If you go back to when they started tracking things, I think it's like 12% is the average return in real estate, with the stock market being, I think it's like 8 or 9%. So there's a good sized gap.
Speak to aligning, say, the family's focus with the multifamily office. I was thinking about a little bit, like you mentioned, well, this family may have a focus in investing in oil and gas or some other type of investing, where this one may be more focused on real estate, or maybe this one has a different, family dynamic, or more people in the family, or they live in a specific place versus, somebody else. How do we think through some of those aspects and ensuring the alignment and just the goals are aligned for the family, the multifamily office with the family?
Well, it's like any other advisory, and I think I understand your question, but it's, at the end of the day, it comes down to an advisor that's there as a third party, helping look over what they're doing. And hopefully it's holistically, it's looking at everything together. Anne Hesh, who died recently, she didn't even have a will. And that happens so often even something minimal like that, right? Or updated or whatever the case is. So, the advisor is looking at it as a whole, but it still always comes down to the comfortability and the risk tolerance of various families and the people that are sort of leading the charge with making those decisions. What you do find is that you're typically heavily overweighted if you made your money in a certain area. So if a family made all their wealth in real estate, guess what? They're probably very heavily weighted in real estate, but that's because they know it. If I was sitting on a couple $100 million, I would find families that created their wealth in certain areas that I wanted to invest into and see if I could invest next to them, because they've already done it. They prove it. They have their own money in the game. They've got experience in whatever it is. It could be the dental space, technology. I don't understand. I mean, I understand it fundamentally, but I don't understand the intricacies of it, where they could look at a deal and say, oh, this is awesome because of this, just like we can do in real estate. And I think that's, if you are doing any investments and you have that ability to do that, then I think you really should. And then if you're overly heavily weighted in a certain area, then you need to start thinking about diversification. The average return for a family's overall portfolio, what do you think it is?
I would say 8%.
Yeah, 7%.
7%. Okay.
7%. And when you work for families, you get the same thing said to you every single time. You have 3 objectives, and they'll say, look, there's 3 things that you have to do and focus on. Don't lose money. Don't lose money. Don't lose money, right? Because you're never going to be able to create that type of wealth again unless you're, 1% of the 1% type deal.
Obviously, somebody in our syndication business, and we're raising money from lots of families and lots of investors all over the country, hundreds and hundreds at a time. If we're raising, many, many millions, and so speak to because I know there's operators listening as well that's saying, "Hey, I'd love to connect with these families, right? How do I build that relationship? How do I connect with them? How do they know that I'm a legitimate operator? How do I express that just to build their relationship with their, say, family office or the family themselves?"
That's the hardest thing. You can buy lists, and they're going to be hit or miss. It's difficult, and I think it's probably harder today, but there could be some. Families don't hang out the shingle. You can go to these family office events, and you will meet a couple families. I probably know 500 families, but I've met them over 7 years. And when you work for a family, I could leave messages with 10, and 5 will call me back. If I'm a sponsor, an operator, I could call 50 and maybe 1 will call me back, right? So it's definitely different. And the biggest thing that you need to do if you find an ultra wealthy family or an ultra wealthy person is to build that relationship. Don't just come out and say, hey, we need $5 million, because people think that, okay, they're just going to write a check for $5 million. They may, 20 million, you're only going to get a check that size from a Michael Dell or a Bloomberg office or a Ross Perot. You're not going to get it from the majority of families. And they might just start with 200,000 or 2 million, but the next check could be $1 million or 10 million, right? So they're going to tip their toe. Who are you? Do we have a good relationship? Because it's relationship driven. And so you have to build that relationship and add value. And they need to understand more than anything. I think one of the misnomers is that, and I had this, is that don't assume that they understand everything you're talking about. Because you spend 40 years in chemicals or technology, you get all this money, they don't understand hedge funds, private equity, venture capital, real estate, let alone venture capital. And some people spend their whole life in healthcare. And then it's not just healthcare, but a certain size of healthcare, right? So there is an educational process with a lot of these wealthy people. So don't assume. So instead of pitching with the deal, I would start and say, let's say you're doing a workforce housing. Yeah, so we're working on a workforce housing deal. And, the things that you need to be aware of is X, Y, and Z. Oh, and by the way, for example, the project we're working on, and then it relates back to that, instead of saying, okay, here's the deal, here's the return, this is what, well, they could be looking at you and say, I don't understand what workforce housing really is. I had a guy worth 250, 300 email me. He goes, DJ, what's the difference between workforce housing, affordable housing, and, just basic questions. You'd be very surprised at what that is. And that's why I ended up creating the Family Office Real Estate Institute as a place to not only provide education for families, but also to provide that community where you can actually meet some of these families and be able to present your deals or learn about education like this, how to work with families.
Can you provide any advice that, say, families are receiving now, or what the majority of families are doing to hedge against recession over the next 6 to 12 months, expected recession?
It's interesting because back when the recession hit, the major recession, families were waiting to see things start coming up until they started investing. So really, they were investing up here instead of down here. This time, families are building up dry powder, and they're waiting to see what happens. And there's always opportunities. It doesn't matter if it's real estate or the stock market. You can make money in up and down markets. And so it's a matter of the fundamentals and what that opportunity is. And what they're doing, a lot of them are just holding off and waiting and see what's going on, going into cash and wanting to sort of pounce on some of the potential distress that could be coming out, or, buying opportunities across the board. So that's what the majority are doing, is just lock and loading.
Yeah, I can relate to that personally, but then even your comment earlier, I meant to mention about family offices investing at a lower amount, say 200,000, and then the next time it may be 4. We've had families do just that. It's like, they receive a bunch of questions, we get to know them, we get to meet them, and then 200,000 one deal, 400 the next, then $1 million the next.
And they'll refer if they're happy, right? And they're like, okay, I'm now comfortable. I've gotten to know you. I trust you. Well, guess what? Wealthy people know wealthy people.
That's
and
right.
Then they'll refer you. So, and back to what you said about, well, how do you sort of get in there? Well, it's just networking in general, but you need to be around areas that you're going to find these type of individuals. They're not going to be necessarily at some of you'd mentioned the various masterminds groups. Well, I'm sure some of those that you'd probably never see anybody that's worth hundreds of millions of dollars there just because of the topic or whatever the case is. But yet there could be other groups that they're like, let's do this. I really need to understand, Tiger 21 is a big, I don't know if you've ever heard of that before.
I have. Yeah, I know some people in Tiger.
Yeah, you've got to be a minimum 10 million net worth. And so it automatically creates a certain level, but a lot of business is done internally. And so it's just a matter of trying to be in certain environments, country clubs, meet people. Right? It just varies.
Yeah, I thought the minimum was 100 million for Tiger 21.
No, it's 10 million, but there is somebody broke off from Tiger and now it's 100 there. I think it's something 360 down in Florida, and the minimum's 100 million for that. Maybe that's what it was.
Yeah. Maybe I probably got it confused. Well, DJ, I could talk about this forever. I'd love to have you back. Let's dive into a little more family office stuff as well. I just think it's been so helpful to think through, even at a high level, who needs a family office, who doesn't. But even I love the holistic approach and thinking through that as who this family office is and aligning with what the family needs, the whole family, right? And not just their investments. So, a few final questions, DJ, as we run lower on time. But I wonder, even in your business right now, I ask almost everyone this, what's the biggest challenge in your business right now?
Well, we allocate on behalf of families into opportunities, right? So we'll partner up with best-in-class operators in an area that we're targeting. The biggest thing is like anybody else. Anybody raising capital right now saw some, especially with the interest rates, right? Saw a lot of people pull back on investing. And you combine that with the holidays, right? And so that's probably one of the biggest challenges in our business right now. And so we're finishing up, a project that we're working on with an operator. And I would say that's the biggest thing. And I think that if there's any operators or sponsors listening across the board, they're probably going to say the same thing, right? About the capital raising. If you're an investor, the biggest thing I can say is do not necessarily say I'm automatically sitting on the sidelines, because you have to look at the fundamentals. I'm here in Denver. There's still a housing shortage. People are still moving here due to cost of living, quality of life, affordability, jobs, right? And so there's still these demands that you need to take a look at. And it is creating some buying opportunities today because people have retraded or whatever the case is. So keep an open mind. That's the biggest thing that I can say. And if you've got somebody you trust and believe in on the operating side, then, go with it.
Yeah. DJ, what are some of the most important metrics that you track? It could be personally or professionally. You tell people it could be your bench press number, how many mornings you got out of bed on time, to how many deals you all are analyzing.
The biggest thing that we look at is where we are in the cycle. I don't know if you've heard of Glenn Mueller before.
Oh, yeah. He's been on the show.
Has he really?
Yes, yeah.
He's actually the academic director of the Ford Institute.
Awesome.
Yeah. And so his market monitor is on that website, Ford.institute and not .com. And he goes over where we are in the cycle based on property type and location. So that's one of the biggest things that we look for. And then, the other metrics that we've really been doing is stress testing everything. So we'll look at what happens if interest rates go to 9%? What happens if vacancy rates go from 3 to 10, 15%? What happens if, we can't sell at a 5 cap and it's going to be a 7 cap? What's those net returns? And so those are the fundamentals that we look at and we play with, right? Because if you protect your downside, your upside will take care of itself. And that's the biggest thing that we look at on the investing side.
What about any habits that you are disciplined about that have produced the highest return for you?
Yeah, I would say, have you had Richard Wilson on your show?
A few times. I know Richard.
Okay, so he's a friend. Richard has the very best information on raising capital from families. And it's funny because if you read his book, which is a smaller book on raising capital, he talks about all the fundamental things that we've all heard about our whole life that you need to do that you don't do. And that's, for me, that's been writing articles, speaking, doing podcasts, doing blogs, education, all those things. And that's had the most reward. I mean, I'm sitting here and I've had the accolades I've had because of that. And really, positioning myself similar to what you're doing here, right? Because you're able to provide expertise. That's probably, I would say, one of the biggest things to do it. You just need to do what you're supposed to be doing, but you never do that. And that's really across the board, right? It doesn't matter if it's investing, you're supposed to look at these certain metrics or you're supposed to do this, and yet you don't do it when you're analyzing a deal or you're running a deal, and it'll come back and get you.
Yeah. Often we know the things we ought to do.
That's right. Just same thing as exercise and eat, but how many people are really stringent on what they eat or if they exercise or get enough sleep? It runs the gambit across the board.
Yeah. And there's plenty of evidence to prove those things, right? And we still don't.
We know that, you shouldn't eat all these chemicals, but we still do it.
Yeah. What would you say, DJ, is the number one thing that's contributed to your success?
I would say for myself, it's exactly what I said, which is doing all the fundamental things in order to create the awareness. And I can honestly say that when it comes to family office and real estate, I don't know of anybody else that is in the same stature as I am. And that's just happened over time by actually working for families, understanding that, creating relationships, and, starting the Family Office Real Estate magazine and now the Institute. I would say that. But, conversely, 7 years ago, 8 years ago, I literally said, I now know what I want to do with the rest of my life. And so I'm like, okay, let's just lock in there and do it. So
that's awesome. How do you like to give back?
It's interesting because one thing I've really come to the realization about through the Institute is, yes, you can make a lot of connections, but it's really an opportunity to help provide the education that's needed, help with that loss of capital that happens in multiple generations, and to provide resources for that. It's actually a lot bigger than I ever imagined. This sort of happened organically, but now I'm like, you know what? This can do a lot of good. And so that's how I'm doing it.
Yeah. Wow. No, it's awesome. I'm grateful for your expertise and how you've given back to us today and the listeners. I know there's many that are listening that will want to connect with you further just after what you've talked about today and your expertise in family offices and creating your own family office and when that's necessary. I know we're very focused in real estate, the real estate syndication show, right? And so many people listen to learn how to invest in syndications, but often they don't understand, when they need a family office and when that's important, and how to even go about thinking about that. So I know you're going to be a great resource. DJ, thank you again. How can the listeners get in touch with you and learn more about you?
Well, they can go to djvankeuren.com about myself. If they want to email, they can email me at djvk, DJ Van Keuren, djvk at 4fore.institute. Not .com, but .institute. So djvk at 4.institute. And what I say every time I meet somebody like yourself is, if there's anything I can ever do to be of help, feel free to reach out, send me an email, give me a call, and I'm happy to help in any way.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.